Hey, it's Jack from Alpha Charts with a review of the Dow Jones Industrial Average. Today is November 5th, 2022. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security, and I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you like these types of videos, please find me at Twitter at AlphaCharts365. That's where I post all kinds of stuff. Links to my other videos will go on through there, scans, my thoughts on the market, just everything goes through my Twitter account. And if you really like these videos, please become a super follow on Twitter. That's where I give even extra bonus content all week long, including extra market notes, extra videos. Again, my scans, they have my best scans, everything. So that's my super follow group on Twitter. Appreciate you guys and all your follows there. Okay, so Dow Jones Industrial Average, real fast. A lot of people give it a bunch of crap because it is only 30 stocks. But I think that it's a really important average to go over because it's 30 stocks, but it makes up a pretty good view into the market, right? Because it's fairly diversified as far as what types of stocks are in there. And anyway, so I think there is a huge value in going through each one of these. So basically, as I go along, I've not looked at these charts yet. As I go through these charts, I'm going to decide whether it's an uptrend, downtrend, or neutral, no trend. Just in general, though, let's look at the Dow Jones to get started, and it's actually holding up way better than the rest of the market. So this is a weekly chart right now that we're on the Dow Jones, and you see that there's a downtrend line that we can see, and it held basically this area where it was, we'll call it supposed to hold. So this is the low of significance right here, right? Again, it could have came down here very easily. It didn't. It held up here. So maybe a little sign of strength there. And now it is contesting the 50-week moving average, which is this blue moving average right here. Let's go to the daily, though. Let's drill it down. So on the daily, what are we seeing? So from the top, which is right, here in January, this was the top. We have a very well-defined downtrend line. Let's just make this a little bit bigger so we could see it all very nicely. Well-developed downtrend, lower highs, lower lows. So as of right now, still in a downtrend, but it does look much better than the rest of the indexes because we're already flirting with the 200-day moving average again, which, listen, we did here and we failed. We did it here and failed, here and failed, here and failed. We're doing it here. And so far we have failed, but not fully yet, right? Taking out this low 317 would be the failure because that's where buyers were found last time. As of right now, though, let's go back 200 days. Where's 200 days? Is it the top here? 211. So not quite. We're actually taking away some of these big bars right there. So this is the this is 200 days prior. So you see there's a lot of work to do with price before we could get this kind of more flattening 200-day, even though it's starting to mitigate the downtrend a little bit. All right. The real test will be if it breaks out above this white line and gets above, 342-ish or so, right? That'd be the real test. But as of right now, downtrend. So the question is, underneath the surface, what are things looking at? How are things looking? So let's go. I'm going to do like the cap weighting. United Healthcare right now is the largest cap in this one. And let's take a look at this on the weekly charts. Well, this is kind of interesting, right? I'm going to move this right here, and you could definitely see an area of importance here. And again, I had drawn these lines in probably years ago or weeks ago for sure. And you can see how there's an uptrend that is intact, and things are moving sideways very nicely. Price is above a flat 50-day and a rising 200-day. So overall, it's in an uptrend. And if it breaks out above 550-ish, this could start a whole new, it's consolidated literally since April or November now. So 7 months consolidation. And again, each low is getting bought up sooner. That's kind of nice to see. I think this 527-ish area or the 50-day, whatever you like, is probably the point of contention, but uptrend, right? That's UNH. All right, let's keep going. Goldman Sachs. That's the next one. That's about by the way, UNH was just over 11%. Goldman is just over 7% of the Dow Jones. Okay, looking on the weekly chart. So again, you'll see some old fragments of stuff in here that I'm going to just delete. And what do we have? So, we had the strong downtrend from October, right? It's been a strong downtrend. And then we have a higher low here. Boom. And then if we kind of could do, I'm sorry, finding my tools, right there or so, we can maybe even go there, this area. That is, where I could say, a breakout would probably bring us back up to testing all-time highs. Go to the daily. And you see the 50 days already going higher. 200-day is flattening. This was the area we talked about, which makes sense on this lower time frame, the daily. And things are looking really strong. Yeah, Goldman Sachs looks like a buy if it breaks out above, really anywhere here, right? 360 or higher, right? Goldman Sachs looks pretty good. And next up would maybe be, 428. That's a pretty good spot right there. Was that 20% or so? What is that? Almost 20%. So yeah, Goldman Sachs, another one looking good again. And these are both, between the two of them, you're talking about 18.5% or so of the Dow. All right, next up is Home Depot, right? Home Depot is about 5.8% of the Dow. And let's go to the weekly, and not as good looking as the other charts. You still have a rising 200 week, which was important support. And, again, kind of defines the longest of term trends that I could think of, but everything else is kind of down. And we still have a declining 50 week moving average. So let's drill it down. That doesn't look so hot. Earnings coming up soon. And yeah, so you have the double top here, which began the cascade down. And maybe you could say, okay, well, it kind of held this area, right? Okay, I can make that argument. Okay, and then is this a head and shoulders topping pattern for the next leg lower, or are things going to start to firm up? Below a declining 200-day, below decline, not below, but right at basically a declining 50-day underneath everything. To me, that's a bearish looking chart, and that's down, right? Especially the decline price well below a declining 200-day. It would have to get above 300 for this to turn around for me. All right, next up, McDonald's, MCD. McDonald's is, by the way, let's go to weekly, 5.6% of the Dow and breaking out to all-time highs, right? So there's nothing bad about that. And I'm going to just steal one of these because it makes my life easy. And you can definitely see this type of basing pattern from December 2021. And now prices broke out. McDonald's looks like it wants higher. Everything is bullishly aligned. And yeah, that's a beautiful looking chart right there, right? Beautiful base, almost a year long. Price broke out. McDonald's, strong name. So now 3 out of 4 right now. And some of the largest caps are very, very strong. 11.2, 7.2, and McDonald's was 5.6, right? Roughly market cap wise. Yeah, McDonald's looks great. Let's keep going. Amgen is next, right? AMGN. Looking at the weekly chart, another one with a beautiful breakout of a very defined area, and things look like they want to move higher. Everything is bullshit aligned. Amgen makes up roughly 4.5% of the index. And yeah, and there it is on the daily, right? You have a 2-year base here, breakout after earnings, came back, retest, everything's bullishly aligned. That looks fantastic, right? So Amgen holding up extremely well and bullish looking on top of it. Again, we're going to say it's 5.5%. Again, we're doing this by cap weighting, and so far so good. All right, next up is Caterpillar. Home construction, everything else, builders aren't looking great. Let's see what Caterpillar looks like on the weekly. Caterpillar doesn't look bad, right? I mean, I'm actually pretty shocked at this. You can easily say that this area is important. I'm sorry, take a drink real fast. Sorry about that. This area is important. We had a false breakout. Things came back pretty nasty, right? Almost cut in half. And then we've had on the right side, a little sharp, so maybe a little extended, but overall, that's constructive. Getting Caterpillar makes how much? 4.5. And a very defined area for the potential breakout after earnings, good volume coming in. Yeah, I mean, if it gets above 230, 235, Caterpillar looks pretty good. I'm putting it in the bullish column, right? Nothing bad there. Caterpillar I'm actually really surprised here. 4.5%. All right, let's keep going. Microsoft. Okay, we know tech's been rough. Let's go to the weekly, and Microsoft is obviously very rough. Right on the 200-week moving average. You had the head and shoulders top. Came back, kind of retested that breakout. You have everything basically moving lower. Yeah, I mean, there's just nothing. It's hard to be bullish on any tech names. I guess you could say this 200-week held. That's the most bullish thing I could think of. But it is under, this prior area. This was back in 2020. That price is under. Everything is going lower on this. Microsoft definitely on the down swing. Again, I'm only putting market caps down for the positives. It's 4.4% though. Okay. Next up, let's go weekly to Honeywell, HON. Honeywell is 4.2% of the market, Dow Jones market. And, first thing that looks out at me is that we broke the downtrend line back to the up, and we have actually rising now moving averages on the weekly. And then on the daily, I mean, I'd like to see the 50-day. I'm sorry, I need to go back to there. I'd like to see the 50-day to overtake the 200 again, but you have the 200, which is flattening. You have the 50-day, which is rising, again, still under rising. And you have a beautiful, almost like bull flag that's breaking out. You have this area that, looks really important. Dividend coming up here, volume coming in. Honeywell looks great, right? Honeywell looks really good. It's 4.2% of the market. I'll be honest, I was not expecting this many good-looking bullish charts. So far, I have 2, 4, 6 bullish and only 2 that look pretty crappy. Let's look at Visa. Weekly chart. Look at this. Again, a lot of VWAPs I've put in here over the years. And, I'm going to get rid of some of these VWAPs because I don't think they're adding to my chart right now. So definitely downtrend. Right. Definitely downtrend. You can almost see, a lot of wicks up here, a lot of people selling into it. Not the most bullish looking chart on the weekly. And even on the daily, I could probably pull this all the way to here. That's, roughly like that, right? That looks pretty good. These moving averages are all kind of choppy, not looking good underneath the 200-day. Visa is definitely on the downswing compared to the rest of stuff, and it is about 4% of the Dow. Let's keep going. Travelers, insurance. Now, insurance have been looking good overall in general, and Travelers does too. I mean, look how strong this looks, right? Like, we're seeing under the surface a lot of great looking charts. Again, a little strong on this side. I like a little more symmetry in this, but overall, everything is looking great in the Dow. Again, so we see, what are we seeing so far? We saw, actually, I'll do a recap at the end, but Travelers looks really good, really strong on the weekly. All the moving averages are aligned bullishly. On the daily, setting up very nicely. Earnings out of the way, dividend in a while. Travelers, TRV. looking really good. And that is 3.75% of the Dow Jones. Next up, Chevron, CVX. I mean, we shouldn't be shocked why, Dow Jones is holding up so well, because you have a lot of names that are holding up well and look really good. Here's your Chevron. Here's let me go to weekly. Here's a kind of, uptrend, then kind of loose, nasty looking base, but held where it had to, made a higher low here in September, and now is breaking out. And I believe it's all-time highs. Yeah, all-time highs. Fantastic, right? Everything's an uptrend. Everything looks great. Looking at this, in general, this was the area to watch the breakout, and prices above it. Everything's looking, again, nothing bad to see on Chevron. That's CVX, and Chevron is making up 3.73 of the market, right? Just under Travelers. Okay, next up, Johnson & Johnson, more healthcare. Let's go to the weekly. And how's Johnson & Johnson look on the weekly? All right, so we have a rising 200 week. You have price above a flattish 50 week, and these are kind of bullish. So a little mixed in there, right? Looking on the daily, what do we have? Price is below a flat 200 day, but you have this kind of rising, mixed signals, not near all-time highs. Again, a little bit buy and lose, not great accumulation. Johnson & Johnson is going to be in the neutral. J&J is in my neutral column. It's the first one in the neutral column because a lot of mixed signals. It's in the right, it's in the right sector. Healthcare has been doing great, but it just doesn't look convincing one way or the other. Next up is Boeing. Hot industrial, right? Let's go to the weekly and get rid of these because it was definitely a channel going lower. Come on, there we go. So again, maybe this is a bottom, maybe this is the bottom, I don't know. But what I do know is even declining 200 week, 50 week, price starting to go back and forth in here. Let's go to the daily. Kind of strong up the right side into the 200-day moving average. Good volume coming in, maybe a little bit strong, right? Things are turning here for Boeing, it looks like. We'll see if it what it does here. I'm putting it in the neutral column, okay? Boeing and Johnson & Johnson, two neutrals here. Johnson & Johnson, by the way, is 3.5%, and Boeing is 3.2% of the Dow. Next up, Salesforce. Again, tech name, so I'm not expecting much from it. Let's go to the weekly. And yeah, there's not much to see here. It's been in a downtrend since the top in November, closing almost multi-year lows, right? Since 2020, multi-year lows. Nothing positive on the weekly and nothing positive on the daily. Salesforce CRM is by far not good at all. Next up, Walmart, WMT. And I have all kinds of things drawn on this chart. Let's see what we got here. So this is from the 2015 low, and there's an uptrend that obviously got taken out. Let's just take that off. So that uptrend, now we're like, is this a bear flag or not? I think it went too long for the bear flag to be in effect. So I'm taking that out too. This trend line may be in effect. I'm going to take that out. And here's what we're actually left with, right? Just a pure price action. We have a rising 200 week. We have a flattening 50 week. We have bullish crossovers, price above it all. Very positive look there. Again, 152-ish, 160 may have issues in there. We'll see. Again, not like my bullish chart I've ever seen, but not all that bearish on the weekly. And here is the daily above a flattening 200-day, 50 days rising. All these other moving averages are rising. Some earnings coming up. I'm going to put this in the it's above a 200, which is flattening. This is a tough call. But I do see a lot of overhead supply here. So I'm going to put this in the neutral on me. I don't love it. I don't hate it. It's a hard read. Walmart, by the way, is 2.9% of the Dow. All right. Next up, American Express. Looking at the weekly, a financial institution. And overall, though, it looks more like Visa than it does look like Travelers. And they're both in the financial space. One's obviously insurance, and one is more credit card based. Underneath the 50-week declining. It's hard to be bullish. This stock, again, looks a lot like Visa, in my opinion. Here is American Express, and let's look at Visa. Again, similar enough in their looks. And again, I would put this in the down category. AXP in the down category. They make up 2.9% or so, just under 2.9% of the Dow. Next up, Apple. Rough week for Apple, man. Oof, rough week. Looking at the weekly charts, it was down 11% in a week, coming back to retest this area. You have a very, I think, well-defined topping looking pattern, held up better than other technology type companies, but not a good look, even with a rising 200-week underneath all these moving averages on the daily. Again, a break here would be extremely bearish, in my opinion. Broke here and rebounded rather quickly, but still made a lower high. A break below here, and things get to pretty nasty to that $100 level pretty quick. I don't like the way Apple looks. Apple is on my down list, and it's 2.86% of the Dow. IBM is next. IBM, weekly chart. It looks like I had some, again, I haven't looked at this one in a while. You could kind of say it's trying to get above this area. And there's your bunched up moving average, which is kind of nice to see, right? Looking at the daily, we're starting to get a bullish turn, still below this area of supply. There's dividend coming up. I'm going to put this in the neutral. This is neutral because I do like the way the moving averages are curling and things are looking there. It's starting to set up, but it hasn't proven itself by getting above, 145-ish. Once it gets above 145, it had more overhead supply here in the 170s or so. And then, 200 would be the ultimate goal eventually. So again, it's starting to set up, starting to look good, but can't really go on that. By the way, this was 2.77% of the Dow. So we're starting to get into some evenly rated companies. Procter & Gamble, I would expect it to look like Walmart. Let's go to the weekly. And so we do have a rising 200-week, but declining 50-week, and all of these are declining. Looking at the daily, again, underneath the 200, 50 still declining. It's not a good looking chart. Procter & Gamble in the down list. All right, let's keep going. We're almost there. We are on, by the way, Procter & Gamble was 2.7. JP Morgan on the weekly went up and just tagged the 50-week. Kind of bullish looking crossovers happening here. That's always a positive. Looking at the daily, above a declining 200-day moving average, which is now starting to flatten out. 50 days curling up. Things are starting to look good. We got earnings out of the way already. Positive on earnings. Big pop, big strong move. I think that, yes, maybe this is an area where there's a little bit of a pullback. Let these moving averages catch up. But overall, I think JP Morgan looks pretty good, right? So let's go JP Morgan right here. And JP Morgan is 2.6% of the Dow. Next up is 3M. MMM. This is not going to be a pretty one. Yeah, industrial type name. This is really an issue right in here. Big toppy looking pattern. Lots of volume on to the downside. Hard to be bullish this chart at all. Yeah, everything looks pretty rough. Triple M is in the bear category or the down category. Walt Disney World, DIS, always raising their prices. Let's see if that's looking for a better chart. In my opinion, it is not. I think I can easily draw something like that, and you see how this is a mishmash. In here, there's really no identification of trend. Maybe again, this is a higher low, and things are going to start turning around, but we don't have that yet. Still underneath declining 200-day, declining 50-day, underneath all the averages. Disney, no bueno. We have 2%, 2% of the Dow. Next up, Merck, MRK. Back to things that are in uptrends. Here you have Merck, strong uptrend, breaking out near all-time highs, had an inside week right there. Very strong looking chart on the weekly, on the daily. Same here, just kind of coming back in. Nice flag coming up here. Easy, breaks 100. It's easy to be long Merck, right? Very nice looking chart right there. Again, beautiful base. Merck in the strong column. 2% right there, 2.0. So again, we get into smaller components of it. Next up is Nike. I expect that to be more like a Home Depot or Microsoft, Walmart, even Visa. And yeah, what are we seeing on the weekly? We're seeing just a disaster of a chart, right? Nike's not looking good at all. Looks more like a bear flag than anything else forming on the weekly. On the daily, we're seeing just a horrific downtrend, failed at the 50-day, declining. To me, this again looks pretty rough. Nike is with Disney, no good. Nike runs 1.86% of the Dow. Next up, Coke, which is 1.2% of the Dow. Okay, we're down to really small components of the Dow. Right off the bat, I'm looking at this area that could be important and kind of has been in the past. You could even, I'll make it big. What the hell? It's only from 57-ish to 50, 60. Price trying to get above it. We have a, kind of back and forth going on here. Let's go to the daily. Maybe we'll get some, underneath the 50. I'm sorry, underneath the 200-day, trying to bounce right there. Mishmash, we're putting in the neutral KO. No real hard opinion on that. And it's only 1.2%. Next up is Dow. Dow is in the Dow, right? DOW. This is again, looking at the weekly chart, everything is in a downtrend, right? Underneath all the pertinent moving averages, underneath the declining 200-day, above the 50-day, again, nice little pop right there, but declining 50, a lot of overhead supply going on in this particular name. You could have called this a cup and handle, right? And then it just completely failed from there in June. And things have been in a downtrend since. It doesn't look good at all. Dow in the downtrend. That's 0.95. Next up, Cisco. Cisco is 0.9. Again, so less than 1%. So these will have much less weighting on anything that this Dow is doing. Yeah. And I haven't looked at this in a while. You have this area that maybe was important, maybe not. On the weekly, underneath all the moving averages, this is looking pretty rough. Cisco, like most technology names, you have earnings coming up and things just, not looking good at all in this particular name. Hard driving 200-day, Cisco, you get the down. I'm trying to make a decision on these, right? My best I can. 0.9. Verizon, VZ. Verizon looks pretty crappy. Look at that, from 61 to 37, cut in half. And looking at the weekly, again, nothing good to see there. Daily, nothing good to see there. Everything's moving lower. Verizon, pretty crappy. That was VZ. And Verizon makes up 0.77, right? Walgreens, big crappy company, makes up 0.734 of the Dow. Again, horrific downtrend, topped in 2015 and hasn't made a new high since. Everyone that's in this name is underwater since 2015. That's so bad. Again, is this area going to be important? Well, kind of held there at $30 last time. We'll see where this bounce goes to, but you see the 200 week has been, really the showstopper since 2018, and we have underneath a 200-day, you have the 50 kind of curling up, whatever, dividend coming up. But again, this downtrend so strong, I'm not willing to take a stand on this one. Walgreens Boots Alliance, WBA, you are no good. All right, last one's Intel, INTC. On the weekly, this one has stopped out, going back to 2000, the $68 has been important since 2000. It couldn't break above it. It totally, completely failed underneath all these moving averages. On the daily, nothing to see here. Intel, no bueno. INTC. By the way, Intel only makes up 0.56% of the Dow, right? Walgreens was 0.74. All right, so what is looking good? I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 of the 30, 1/3 are looking really good. 1, 2, 3, 4, 5, 6, 7. 15 are looking, in my opinion, pretty rough, and about 5 are neutral. Now, what's holding the Dow up is that it's cap weighted. So United Healthcare on the daily, you know what? If this breaks out, it's making 11.2% of the Dow. This is going to really be, a big winner and really hold up the index. Goldman Sachs, right? If this breaks out, again, a beautiful looking setup. It makes up 7%, right there. We're at 18.4%, right? McDonald's, right? Already broke out. It's looking like a great looking setup. That's 5.6. So I should actually be having a calculator up here. Let me put on the screen here. Actually, I'll keep off screen. 11.2 plus 7.2 plus 5.6. Right, we're up 24% of the Dow. Amgen, right? Looking really good. Just a retest of the breakout for now. If it continues to move higher, Amgen is 5.5 of the Dow, right? What else? Caterpillar. Really strong name. If this breaks out, Caterpillar is 4.5%, right? Honeywell, right? If this continues to break out, right? Again, these are all ifs. We don't know the answer, but Honeywell, if this all breaks out, is 4.2% of the Dow, right? Travelers, insurance has been really strong. We can see if this, again, continues to act well, it is roughly, Travelers is 3.75% of the Dow. Chevron, CVX, really strong looking name here. I forgot they brought ExxonMobil out, but they kept Chevron in, breaking out to new all-time highs, right? That looks really good. 3.73% of the Dow. JP Morgan, strong looking uptrend right here, right? Again, if this kind of just consolidates and breaks out, JP Morgan makes up 2.6% of the Dow. And then the last one is Merck, right? This is the last big one of my 10. 1/3 of the Dow is looking good. Strong looking name, looks great. It is 2% of the Dow. Well, guess what? Those 10 names cap weight to make up 50% of the Dow. So why is the Dow Jones Industrial Average looking so good? It's looking and holding up so much better than the rest of the market because 50%, 1/3, 30%, which makes up 50% of the index, is actually looking in a bullish manner to me, right? Again, we're going to start getting this this 50-day really start to flatten. Right? So there's the 50-day right there, 50th bar. And as this comes down, if price can stay above here, we're going to see this 50-day flatten and start to turn back up. And price potentially is going to get above that 200-day again. Now, whether it stays above or fails remains to be seen. It has failed every time since the top, basically. Every time it's gone underneath it, it's failed, right? It's what we call a downtrend, lower highs, lower lows. But it may look like at least a tradable rally or short-term bottom may be in. And again, and this is a really decent proxy for the market. And what do we see? We saw health insurance. We saw financial names like Goldman Sachs and JP Morgan, like health names, United Healthcare, Amgen, which is biotech. We saw insurance like Travelers. We saw oil and gas, CVX, McDonald's, I guess we'll call it, I don't know if it's staple or not, but whatever. Merck also with the healthcare, right? So lots of healthcare, financials, insurance, oil and gas. That's what we saw. Caterpillar, surprising, was in there too. So maybe some industrials, right? With Honeywell, Caterpillar and Honeywell. What did we see that was bad? Home Depot, Walmart. I saw all the technology names were pretty rough looking. Actually, Walmart was kind of neutral, but Home Depot wasn't looking so good. Visa, credit cards were looking pretty rough, right? Walmart and Coke were neutral, right? So we got that going for us, right? But Nike, Disney, they were looking pretty rough. Procter & Gamble, not so good. Walgreens, not good. So there we go. That's what we got. So Dow Jones, I think there's a lot of value in looking at this. I think that, a break above the 200-day is worth watching. And I think within the Dow Jones, there's some specific names that we could potentially get long that are in actually really nice uptrends, right? In a really crappy market, there's some names in really nice uptrends. And I think there's places to take advantage of that. All right. Hey, if you like this video, let me know. I want to hear feedback on this. If you think going through the Dow Jones was worth your time, I think it is. And if you want to see more videos, go ahead and give it a like, subscribe to my YouTube channel. And again, I appreciate you guys watching. Take care. Bye.